Any question? Good one here.
Okay, so it's Paula Jarzabkowski from Cass Business School. I'd just like anyone on the panel, since this is the market panel, to reflect on the kinds of content that Emma Carhan put up, where she showed the kinds of loss that we might be seeing arising from these accidents and incidents that could be potentially covered by some sort of shift in our business interruption products. But at the moment, we either don't have those products or we're not distributing that set of products. And I'd be curious to hear the market perspective on who should be involved in the development and distribution of those products, given that at this stage we may not know the extent of revenue or the sort of affordability that they would have. So perhaps you as the market group could reflect on that.
Good question. It gives me time to reflect. It's like opening up a new business, I suppose, a new business line. We're going. I mentioned in the presentation, cyber's in a new state. It's sort of a bit like terrorism was post 9/11, and I think to answer your question as quick as I possibly can, we need to involve as many people as we should, both on the reinsurance side with the government pools, because it's in a lot of countries where there is a perceived demand, and I believe there is a demand, they need to react and be proactive in offering, and it's great to see, you know, I think there's an article last week that Julian was quoted in saying just the same, to answer your question, to be honest. And in the private market that some of us work in, we need to step that up, because there aren't government pools everywhere in the world. And if we think some of our distribution in the UK, Europe, and the Middle East, and Asia, the same risk factors count. And the events, the methods of the attacks are very similar throughout the world. So we need to probably liaise with people like business schools, and you know, from a forensic accounting point of view, if we talk about loss of attraction, I always use the example of Sousse in Tunisia. I think it's 2015 that it affected one hotel, but what about all the other hotels on that strip, that beautiful beach that's there, that went from a 90% occupancy down to a 4% occupancy, or something like Sharm el Sheikh. I think it's been suffering from a lack of occupancy for quite some time, even though there hasn't been a major terrorist attack for quite some years. So I said it was a two-way street, and it was us getting out into the market, into our clients and policyholders, and finding out what concerns them more often than not. And I reckon more often than not, it is that intangible assets that they're more worried about. So I think, to answer your question, as many people as possible, I think we as a market should get together more often. We have the War and Political Violence panel at Lloyd's on the LMA side. I think they could do more to look at this type of intangible products, things that I do believe they are in some shape or form. So yeah, I don't know whether anyone else wants to add to that.
Maybe also a question that when you want to create a market, you can't start big straight away. And I think we are still having that discussion where we don't get the right traction, which is to say, well, we are not interested if you are not bringing a meaningful limit of liability. And, well, we just, on our side, we just cannot bring large limits without, well, having the time to build the market. So, but what I believe is that the risk awareness is increasing at a speed that, well, will probably, well, facilitate at some point the acceptance by the clients, the insureds, that, well, you can't start big, you have to start somewhere, and I think that's what we need. To start somewhere with a large enough number of clients that are really willing to, well, work with us to create a market because they believe that they need the cover.
Maybe for aviation, I think it's part of the operational risk of the airlines, because sometimes you have some groundings somewhere in the world. You cannot fly, you cannot, for a different reason. Remember the volcano a few years ago? That was not a terrorist attack, I presume, but nevertheless having a lot of consequences all over the world. And so I think what Victor said, we have to associate also the clients and to consider that insurance and reinsurance and state is not the only solution. They will have also a part of the, I would say, of the responsibility of being able to shift the activity or to consider that there can be some major factor why the activity is not exactly the same from 1 year to the other or from 1 month to the other. So I think it's a common discussion we all need to have, and in terms of airlines, we are used to have this discussion because there are a lot of reasons why some operators cannot have a regular activity, I would say.
I think I'm not saying that products need to be demand-led, but if we look at something like the Lloyd's market, we have a very long history of product innovation, and we consider ourselves to be quite good and being able to be nimble still in a market that's quite large. That said, though, creating a new product in terms of fixed costs, getting it up, running, testing it, and generating the data is never easy. I think here, echoing what you just said, I think it also comes down to education, actually creating an appreciation for, say, the baker at Borough Market or something else, that there is a product or a set of products that are affordable and can be used to mitigate some of these risks. Then I think technically there are things to figure out. Going to, for example, I think it was Cyclone Yassi in Australia. A lot of the farmers there had insurance for the property damage, but the time lapsed from the period of payout, from the incident to the time of payout, that a lot of them still went under in terms of just not having enough liquidity to keeping the doors open. So I think there's a lot we can do in terms of product design. Personally, and people may disagree with me, I'm not sure if we're there in terms of demand, because in my experience, someone like me, it's very easy to end up in my ivory tower and say, this is what the market wants. We spend quite a lot of money doing it, and then we've kind of missed the first step, which is actually identifying the right base, the right client, and that there is a demand, so they value this product enough to buy it.
Thank you. There's one question here.
Jeff Riddell from Paul Ree. An interesting discussion. I don't think that we've gone back to purity enough in this in terms of what makes something insurable. We have to be able to manage both frequency and severity to create an insurable pool. Many of the things we've discussed will lend themselves to pools, and then we've got the issues that have just been referred to about demand and distribution, and we need to work on those. Where I get most concerned, and this is a question for you, Victor, you brought up the very real issue in an area where we cannot manage severity and frequency in any way at the moment, also of attribution. And we've just seen with some leakage of software from the NSA that backdoors that are much more severe than the basics that you alluded to are being exploited. How big a factor is government attempts to create cyber warfare hiding behind this? And how great is the issue of the ability of cyber warfare to close us down? I fear we know the answer to the ability to close us down, but it's really a question, where does cyber warfare lie in this, and is there any way to deal with it?
As a private company with a duty to shareholders, I mean, for my take is quite simple. As long as it cannot quantify, I will try, and we are trying. We write some cyber, but we write very limited. We write exactly the amount of cyber that we need to try to learn. And we write it very selectively with clients where we believe we have a relationship, whether they are insurers or large corporate, we have a relationship that is such that we can cooperate, and they have themselves the strong willingness to try to find solutions. And that's what we are doing. But I mean, with very, very strict limitation, that is, well, the lack of knowledge. And if we don't know, we don't do. But we would like to do.
Yes, Philippe Gouin from Guy Carpenter. There is a line of business, we haven't talked too much about it, and I just would like to know your feeling about that. It's liability. So is liability a concern for reinsurers or insurer? And do we view more and more possibility to have somebody being liable because of lack of security or different type of things? So is it something which is growing or not? And just by the way, for the nuclear, so I have a good news, is that we have the Convention of Bruxelles and Paris, so you will benefit from 1.5 billion. Sorry, 1.5, yes, billion of recoveries just for that, because it's a no-fault liability for the nuclear operator.
I think in terms of terrorism liability, especially as the threat has changed, and I know Michael was talking a bit about that, we do see a number of different products. For example, active shooter that is more liability focused. We see this predominantly in the US, but for example, as a company, we have been, well, as a corporation, as a market, we have been involved with things such as liability for the Republican Convention in Cleveland last year, which doesn't exclude terrorism, nor do I believe that the active shooter product excludes terrorism. So I think where there has been a demand, I think there has been a reply by the market. These products, when I see them, they typically have liability limits that are relatively high or normal, and then it's the physical damage instead that's kind of sub-limited. And I think that's actually those types of products, especially in the States, I believe, and you might have some comments on that. But I think these are actually growth products where the market has been innovating, and you actually see that demand has been building over the last 12 to 18 months, I would say.
Yeah, I mean, the take-up rate in terrorism liability is very low, even with the last 12 to 18 months. Again, it's like a new product. We're so used to offering the physical loss or damage that we almost react to an inquiry that comes in for terrorism liability. And again, some of the market offer it, some of the market don't. But I think we're still some way to go. We haven't had necessarily any claims examples of terrorism liability in the market. So to test the coverage and test the wordings that we're actually offering on terrorism liability. So like a lot of things that the proof comes out in actual claims scenarios, and I don't think we've necessarily had too many terrorism liabilities that have gone a distance to be adjusted and to even reach court. So I can think of one example in East Africa, but I can't really comment on that. But, yeah, very little take up in that regard.
Yeah, I think it's about time. Thank you, everyone. Could you join me on warmly thank you, our panel, ladies and gentlemen? Thank you very much.